Hello everyone, this is Dan Hussey with the strategy of the day from Zaner Ag Hedge for January 2nd, 2020. Happy New Year everybody, and before we get started, just want to remind you that trading futures involves risk and trading leveraged products involves even more risk. And trading futures is not for everybody or futures an option, so do discuss that with a financial service provider if it's the right thing for you. With all that being said, wanted to start off today talking about, well, let's begin with corn. Why not? We finished strong. Well, we had a green day going, and we were looking a lot stronger in our grains into the close there. Corn traded out the day at 391.5. The March corn futures have put in a little bit of a double top here into the November WASDE report highs that I talked about being a key resistance level that we want to see this market go through at 392 quarter. That double top that's kind of forming right into that area. If we see the market push through that resistance, there is not much in the way again for this market until we get up into the $4 range where the market should find other key resistance like the November high, $4 psychological resistance level, as well as a couple other key swing highs and congestion level that we had above us. With all that being said, though, I will do a video probably early next week, kind of recapping 2019 and where we've been in these markets, because I think it's important to remember and put things into that bigger perspective sometimes. So I'm still optimistic on corn here that we've got an opportunity to go through this 392 area, which would call into question whether or not we can go even higher towards $4. And from there we'll take it one step at a time. I've talked about before that I do feel we may be forming a larger bottom here and be maybe in a much larger range in this market. Getting back to $4 for a solid test at the very least at this point would be some conservative short covering or some price discovery to retest I think a key psychological level for this market. And for many farmers and producers alike, $4 represents about a break-even price level too. So it has more importance this year to the end producer than most. Same could be said for the beans on that regard. Trading around 955 here in the March bean, the 970 area, the prior highs that we had in the March bean from our summertime high as well as our harvest high that we can call it now. That 970 area represents almost a break-even point for many beans traders and many bean producers, depending on your situation. So it's interesting to see that both corn and beans have this struggle and this fight going over a pricing battle now that we knew that demand had gotten taken off the table with the Chinese deal being put on kind of a back burner. Now that that's back and the markets are positively responding to the supply issue we had this year. It's interesting to see that both markets are flirting with that economic level of the break-even point for production, and I'd like to see them, and I think everybody can agree, go above and stay above those levels. The soybean, March soybean futures have come up here, trading to 961 highs on the day. Very strong push here for the beans. Did back off a little bit off that high, about 6 cents, and settled around 955.50. All things said and done, though, this is simply the last 4-hour candle we had was really an inside candle. So for all intents and purposes, we still have a series of higher highs and higher lows forming in this market for the last couple days, and in all intents and purposes, we have a series of higher highs and higher lows on the daily candles as well, taking us to now a higher high and higher low 3 months in a row, going back to November, December, and January highs now. We've had a series of higher highs and higher lows for I guess not higher lows yet for the month of December, but higher highs have formed here. And January begins as an outside candle and an outside month to confirm the outside month that was that was December in the soybeans. We started, actually went lower and closed and went higher there into the end of December. So that's actually an outside month reversal confirmation on the January soybeans. So if there's ever a big longer term technical reason for these markets to rally and to break above the 970 area, in the March beans and to start a more larger term sustained rally, well, if we have that real demand come from China, we continue to see exports, and anything but, I think, a record yield again out of Brazil, given what of setback it was for the balance sheets here in the U.S. Production was this year. I don't see a reason we couldn't have at least all the ingredients for a run towards $11 or $12 in soybeans. I'm not calling for that yet. I want to see us take out 970, get back to $10, right? We got to walk before we can run here. But from a monthly technical perspective, this is a massive reversal setup and situation occurring. And if we break then above this kind of swing high at the 970, the range high that we've held, that dollar range in the soybeans from between, call it 880 and 970 here in the March bean for the last 6 months, breaking above that range is huge and shouldn't be taken lightly. So I'm very optimistic here. I didn't love the pullback we saw today, but for all intents and purposes, we could pull back quite a ways in the beans and still be quite bullish. And maybe a little bit of a healthy pullback wouldn't hurt to start off the month of January. But I'd like to see, continuation right off the bat, us take out the 961 highs and not look back. If that's going to be the case, I think we really have the strength that I've been talking about, maybe alluding to, coming into the market. And it would be the strength we need and the momentum I think we need to really burst through 970 on one kind of go. Otherwise, we might get up in this, we might start getting into that area of resistance where we'll see some turbulence and some up and down price action in consolidation before eventually maybe taking out 970 later this year. And when that could be, who knows? But we're within striking distance, and the front, we're now at the bulls are at the enemy's front here at 970, where the bears need to hold the line. And if they don't hold this resistance, it's going to get you've got 6 months worth of stops above two major highs, coupled with very much larger term reversal structures happening that could warrant a much larger short covering or spook to this market and a run higher. And Chinese demand, if it comes back to the extent it could, with production where it was, we don't have the beans to meet their demand. Not saying that will happen, but hey, the ingredients for the cake are there. Chicago wheat today finished very strong, made a new high, then backed off those highs at the 567 half there high, backed all the way off, almost 10 cents down to the 560 area, where it did hold really what was the 50% retracement from lows around the Monday's open to the highs of today. So basically a pullback for the week. Wheat has been strong, been very much leading the way in the last couple weeks here. This kind of wedge, or this rising wedge-like structure, I'd expect it to really break out if it's going to do so here soon. If not, we could see pullback and consolidation back towards the 540 area, where we have the series of prior highs that we broke out from, the October high, the November high, and the pullback here we've had down into the 560 area is really just, I think, personally, a retest of this mid-December high that we held here around December 15th going into the Christmas holiday. Now that we've established above that threshold, we've come down, kind of tried to base above it once. Now we're trying to base above it twice, and if it can hold here, continue in the overnight and into tomorrow higher with that strength, we do have a very parabolic and bullish market. If not, if it starts to fail and we start to break down trend lines, support at 540, and then again down at 510 if we do a much larger pullback. And we'll talk about those levels, in the upcoming strategy of the days and webinars. And again, if anyone has any questions or comments for me, please feel free to leave them here. I'm always active in social media and love to interact with you guys, and also want to be bringing you the information you want to hear and see every day. Okay, live cattle here, continuing, I think, with some strength in this market, even though we've seen a week of selling pressure, actually almost 2 weeks now of selling pressure in the live cattle. But I see this as a strength today, coming into a market that's otherwise traded off the low end of a range, back down around the 125 area. Remember before I talked about 123's kind of key support levels? Well, as we've ratcheted these lows higher, now we're talking about this 124.50 to 124 area as I think being key support in the near term. This looks very corrective. It looks very sideways. Seasonally speaking, cattle is usually very sideways between now and March, so we could see just sideways price action between 128 and 120, or maybe even tighter, 128 and 124, and go completely sideways, grinding against this kind of prior contract higher at the 126 area that we've been trying to break out of for some time in the live cattle. So if we can't get it going, I expect some sideways price action. If it starts to falter, we start to give up maybe December's low, and certainly if we were to give up November's low right down around 122, that would be cause for concern, and I think a much larger pullback would be coming in way. So if we start to get below 124.50, it's really, we're down into that area that I think it's worth the conversation for you cattle producers to start thinking about locking in some of those live cattle prices. We can, at that point, we'd be looking at maybe buying puts, selling calls. It all depends on what your production schedule and what the markets look like at that time. But, the trend is still up. Until it's not here. We have sideways consolidation grinding against resistance. It's not a reason to run away yet and to think that the bulls have lost it, but it is cause for concern because the upside momentum has waned. We started to lose some of that potential in the market, and all of that potential, that energy that could be taking us higher right now is just being used to grind against resistance and go sideways. So losing a little steam here and there, but we'll see if it can establish itself a footing and press above that 126 to 128 resistance we found. Things don't look that bad. And last but not least today, the lean hogs breaking through trendline resistance here at around that 70 to 71 area. We had consolidation highs around 71, and we're starting to now make an outside reversal to the upside here for January as well. A push above 71 was great to see. I didn't like that we faded back and barely closed the day up at all, but we did hold above kind of, I would say that key resistance that we were holding, the 71, call it 7150 to 7120 resistance that we held for the whole month of December, basically. Now that we've gotten above it, we're trying to stay above it here at 71.72 into the close. So all things considered, it's still a good day, and still the start of potentially breakout. Kind of like the soybeans, if we see immediate follow through, and even the wheat, if we see immediate follow through and through the highs of January, I don't think this is a move that you would fight to the upside. I think this is where you'd go with the momentum here into the start of the new year, see how far it can carry us higher, and go from there. But it's because we have levels that we're breaking through that constitute some kind of trend reversal or momentum breakout higher, and we have levels below us that we can look at to maybe define trend that can also then be used to define the risk of a trade, right? And that creates a whole trade plan. All right, and tomorrow there is a few little news events. Nothing that really is going to affect the grain or the ag markets, but it is last trading on options for live cattle, so be aware of that tomorrow, as it is an option expiration for live cattle. So option expiration days, for those that aren't aware, there's usually a higher volume flows because option traders are either offsetting their options or are doing something in the futures or the options to manage or defend positions. So if there's ever a time for markets to move and defend levels and strikes, it's on an option expiration. And actually, to that point, option expiration in the soybean complex that occurred just last week. If we look at the February or the January soybean futures, and let's go down to the 15-minute chart here, because this was actually January option expiration was right here on this Friday that I've kind of highlighted. And the 940 strike was the strike that was being this orange line here was the strike that was being defended. If we had settled that day above 940, as the market looked like it was going to potentially do early in the morning, those 940 calls would have been in the money. 940, or we come to the about the open, and sure enough, we get about a 10-cent sell-off down to the 930 strike. And it was basically a fight that day between 940 and 930 for, well, it wasn't much of a fight. Obviously, the 940 calls did not win the day out. And the market actually tried to sell off all the way down to the point of taking the 930 call out of the money at settlement. So it tried to do as much damage as it could to the calls that day, taking out 2 strikes that thought maybe they would get a good, maybe get an option in the money, and that is the type of volatility and the type of move that I expect on an option expiration type day. So let's see what happens in the live cattle. We'll talk more about that. Maybe I'll do a look at that tomorrow in my write-up. But until next time, everybody, have a great day. Happy New Year, everyone. Leave your comments, your likes, and everything below. We'll love to talk to you more about the markets, get you involved in our conversations here. And if you ever want to reach me, 312-277-0110. That's 312-277-0110, or at Daniel M. Hussey, Daniel Hussey Jr. on Twitter, and here, of course, on Facebook. Have a good one, everybody, and until next time, and price action develops. Take care.